Hey, what's up, everyone? Welcome back to the channel. Big money flowing into cryptocurrency. Well, makes sense. Big money is big money because companies and individuals that have big money because generally they can kind of see the writing on the wall before most. Of course, there are things like inheritances and things of that nature, but people who have made it themselves and are successful investors, well, they have access. Big money brings you access to information, brings you access to people that the normal investor doesn't. The average retail investor, and that's you and I, retail investors, fails when they invest. There's a few reasons, but one of the reasons I've highlighted in this article later on is one that I have said many times. And that's kind of one of the big things that I want to point out in this article. So let's read this from NASDAQ. Why big money is flowing into cryptos. The crypto sector continues consolidating. Clues about its future by watching the pros. A tiny crypto that could be tomorrow's 10x winner. A lot of cryptocurrencies are going to fail because there are some that have no fundamentals. There are some that have big plans but no liquidity. And I'm sorry, there's a bunch of projects out there that I actually think are really good projects, but the LP is weird. Either the liquidity providers, I don't like where it's coming from, or they have zero liquidity. And liquidity is key. I mean, if you don't have liquidity or your liquidity is coming from one source, that's not a good sign. 2022 has been a handful of assets suffer. 2022 has seen a handful of assets suffer heavy losses. Forgive me. Tech stocks have been put through the ringer. Last week, the Nasdaq even briefly fell into a bear market, down 20% from recent highs. Yes, that's what happens when war breaks out. At the start of war, there's fear, unknown, and doubt. And then later on, as things settle in, people have acclimated to the idea of it, then the market generally recovers. And not only does it generally recover historically, it kind of goes up quite a bit. Then there's stodgy's old bonds. The yield on 10-year treasuries jumped 29% so far this year. Climbing yields reflect falling prices, so this move represents a pain for a bondholder. Perhaps no asset class has had it worse than cryptocurrencies. And see, on that point, I gotta say, I've been in cryptocurrencies so long that I don't really see these dips as something that's horrible. I mean, I've been so seasoned in the market that I see these dips and it's like, yeah, okay, whatever. But we're going to get to the mindset of that in a little bit here. I'm going to skip a little bit here for time purposes. Prices don't always reflect intrinsic value. They do not. Pre-adoption, pre-mass adoption, before everybody understands what everything is, prices are fluctuating. But once we hit adoption and other projects that are perhaps not so good start falling off, and that bubble that I want to pop pops. And yes, I want the cryptocurrency bubble to pop. And yes, we are in a cryptocurrency bubble. There's oversaturation. There's a lot of projects out there and competition of projects, and at some point the dominoes are going to fall and that bubble's going to pop. But when that bubble pops, that's when fundamentals and use case are going to take over. So as long as you believe in the future potential of whatever asset you're analyzing, heavy losses should be welcomed as discounted prices. Exactly. And that is the mindset. Warren Buffett stressed this point in one of his letters to shareholders, writing, "Smile when you read a headline that says investors lose as markets fall. Edit it in your mind to disinvestors lose as market falls, but investors gain." And the tricky part, the part where you stick to your plan and you leave your emotions at the door. As long as you believe in the future potential of whatever asset you're analyzing, that's the key. If you believe in your project and the market's down, you should smile. You know what happens when I see things that are red? Nothing. Nothing changes. I stick to my plan. I don't spend more. I don't spend less. I just happen to get more of what I normally buy for the same price. Imagine if you go into Walmart and your favorite product at Walmart is 50% off, 20% off, 30% off. Are you going to be like, oh, shucks. Well, I guess I better go home and grab my product. Let's say it's milk. And you got milk at home, and you go to grab milk, and you find your milk is 50% off, and you look and you say, milk's 50% off. Man, let me go home, grab my milk that I bought for $3, and let me go out here and sell it back to the store for $1.50. No, you're not. You've already bought the milk. It's in your fridge. Why are you going to sell it and cost yourself $1.50? It's only a loss if you sell it at a loss. The price of milk will go back up to a regular price, but while you're at the store and it's on sale, for your same price, you're getting more. You can get a gallon plus a half gallon. Poor analogy, I know. Half gallons are actually more expensive in the long run than gallons, but you get the idea. It's the mindset. If you invest enough money that you're sweating the markets, meaning you have $100 and you can't really afford that $100, but you want to get rich quick, and you put that $100 into the market, and that market dips, you're sweating. And those emotions are running through your head, and you're saying, I gotta pull out, I need that money, I can't lose it, it's down to $50, I need that money. Well, you say that enough times in your head, and you're gonna pull that money out. And that is the average retail investor being the average person, you and I. And companies know this. Big, huge money knows this. So when these consolidation times are coming, they're spending. And if big money is spending, then you know there's something coming up around the corner. The trick is to take your emotions and leave them at the door. I know. Easier said than done. I appreciate you guys. Thank you for watching all the way through. Consider liking, subscribing, or commenting. Your comments are always welcome here. Your opinion matters. I'll see you guys on the next one.